Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Stock market indices around the world struggled to stay above the flat line for the second week this year amid rising bond yields in the US and Europe and weak market sentiment in Asia. Wall Street sentiment soured amid changing expectations for interest rates in the near future. Private service sector confirmed expansion in the business activities, but participants lifted inflation outlook in the months ahead. The report on the service sector was one of the two key reports that dented the stock market sentiment this week. Moreover, December's non-farm payrolls expanded more than expected, confirming that the Federal Reserve could keep higher interest rates for longer. Market indices sold off sharply in Friday's trading and extended holiday weekly losses, and the US dollar advanced against major currencies around the world. Let us review key economic reports this week. US non-farm payrolls rose 256,000 in December. The jobless rate held steady at 4.1%, and average hourly earnings advanced 3.9% from a year ago. For the full year 2024, payrolls expanded at an average monthly pace of 186,000, totaling 2.2 million, lower than the 251,000 monthly rate and total of 3 million in 2023. U.S. international trade balance widened in November after imports rose at a faster pace than exports as businesses ramped up purchases ahead of the higher tariffs or potential higher tariffs. Total exports increased in November by 6% to $273 billion from $256 billion, and imports advanced over 9% to $351 billion from $321 billion, resulting in a 21% increase in trade deficit to over $78 billion from $64 billion a year ago, respectively. The U.S. recorded the largest goods deficit in November, with China totaling $25 billion, followed by the European Union with $20 billion, Mexico with $15.4 billion, Vietnam with $11 billion, Ireland with $9 billion, and Taiwan and Japan over $5 billion each. The consumer price index in the Eurozone increased for the third month in a row in December to 2.4% from 2.2% in November. The rebound in inflation was widely anticipated because of the base effects driven by large declines in energy prices that are no longer available in energy inflation calculation. India's finance minister lowered its fiscal 2025 GDP growth estimate to 6.4% from 8.2% in the previous year. The slowdown largely reflected the deceleration in spending in urban areas and weaker than expected rebound in the government spending after the general elections in late May last year. In other economic news, business activities struggled to expand in Europe. Germany's factory orders slumped, but Italy's jobless rate dropped to a record low. Japan's real wages and real household spending declined in November, setting the stage for the Bank of Japan to delay its next rate hike. China's manufacturing activities struggled to expand in December, and latest reports on prices confirmed well-anchored deflationary trends in the economy. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 4.8%, the highest since May, after two labor market reports confirmed moderating but strong conditions. Texas crude oil prices edged higher by 5% to $77 a barrel after the U.S. placed new and tougher restrictions on Russian oil, shipping, and insurance companies operating routes between Russia and China and between Russia and India. Natural gas prices in Europe rebounded 15% to €44 per megawatt hour amid a forecast of milder temperatures later in the month, lowering demand in the weeks ahead. The euro dropped below $1.03 and traded near a two-year low as the European Central Bank is expected to cut rates for 4 times this year, but the U.S. Federal Reserve is less likely to cut rates amid strong economic conditions. The yen weakened to 159 after the household spending, adjusted for inflation, declined for the fourth month in a row in November, indicating that the Bank of Japan is less likely to raise rates at its next policy meeting. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq Composite declined after investors lowered expectations for another rate cut at the next policy meeting following the hotter-than-expected job reports in December. European markets closed higher as investors held out for interest rate cuts amid a weak economic outlook, despite a rise in bond yields in the region. The Nikkei 225 stock average closed down, and investors reviewed the latest reports on wages, household spending, and income. Hong Kong and China indices plunged sharply for the second week in a row amid growing skepticism about economic growth recovery, the deflationary trend, and the potential U.S. ban on investing in Chinese tech companies. Indian market indices closed down amid rising outflow of foreign investors following the rise in bond yields in the U.S. and Europe. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Getty Images and Shutterstock announced a $3.7 billion merger plan. Inari Medical jumped 22% after reports suggested that the medical device company is in advanced talks to be acquired by Stryker for as much as $4.9 billion. Delta Airlines gained 7% after the company reported better than expected quarterly results, and the company guided strong earnings and free cash flow in 2025. Walgreens soared 14% after the pharmacy chain operator reported better than expected quarterly results. TCS, or Tata Consultancy Services, gained after the business and technology service provider said fiscal third quarter profit increased 12% from a year ago to $1.43 billion. Fast Retailing, the parent company of Uniqlo, advanced after the apparel retailer reported sales in the latest quarter increased 10% and operating profit advanced 7%, but the Japanese company said sales and profit contracted in China. Tesco, Marks & Spencer, and B&M Value reported mixed sales in holiday period in the UK. Investors are looking forward to the release of the U.S. inflation reports, housing market updates, industrial production, and retail sales next week. In Europe, investors are looking forward to the release of inflation updates in France, Spain, Italy, and the euro area. In the UK, investors are anticipating the release of retail sales, international trade data, industrial production, and retail sales updates. In the week ahead, China is set to announce its exports, imports, and trade surplus data, vehicle sales, and new loans growth. India is on track to release its inflation data, exports, imports, trade balance, industrial production, and foreign exchange results next week. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next